What do you think about these results? Pretty impressive, right? And once you look at the summary section, I think it becomes even more impressive. Because this is the S&P 500, a market with much lower volatility compared to NASDAQ. But despite that, the total net profit and the number of trades generated are still extremely competitive. Now let's take a look at the ES configuration used to achieve these results. And later in the video, we'll also break down New Horizon in more detail, so you can better understand the profit potential behind this system. Just like before, we'll be loading 10 years of historical data, starting from January 1st, 2016, all the way up to today, May 21st, 2026. One important thing to keep in mind if you want to test New Horizon on your own machine, make sure to reload the historical data at least 3 times to ensure the data is fully synchronized and loaded correctly. Also, set your time zone to UTC-6, Central Time US and Canada, because all of our backtests are performed using this exact time zone to keep the results consistent and accurate. Next, we're going to set up the configuration for the S&P 500. First, let's move to the Trading Time 1 section. Trading Time 1 will cover the lowest volatility session of the market, starting from 6 p.m. of the previous day until 9:30 a.m. of the next morning. Next, we're going to set up Trading Time 2, the most volatile trading session of the day, which is also the U.S. market open. This session will run from 9:31 a.m. until 11:30 a.m., a period where the market usually sees the highest trading volume and the strongest price movements. Next is Trading Time 3. This is still part of the remaining U.S. session, but market volatility during this period becomes much more stable compared to the opening session. This time window will run from 11:31 a.m. until 6 p.m. on the same day. And finally, once everything is fully configured, all we have to do is turn the strategy on and let the system start running. And to view the 10-year backtest results as quickly as possible, you don't need to run a full backtest again. Instead, simply go to the Strategy Performance section and select History to review the strategy's performance over the past 10 years. This process is also significantly faster than running a traditional backtest directly on NT8, saving you a lot of time when reviewing the strategy's performance. And here are the final results. This is a very strong performance for ES, especially across more than 10 years of data. The system generated over $400,000 in profit while keeping drawdown at only around $11,000, showing very solid risk control. With a profit factor of 1.35 across more than 6,320 trades, the results look both consistent and reliable. More importantly, the strategy remained profitable through multiple volatile market conditions between 2016 and 2026, which is a very positive sign for a long-term automated trading system. This section also looks very solid. The strategy maintains a positive risk-to-reward structure with an average win-to-loss ratio of 1.22, meaning the winning trades are generally larger than the losing ones. The largest winning trade exceeded $4,000, while the system averaged only around 2.4 trades per day. This helps reduce overtrading and keeps execution much more stable. When combined with the large sample size and low drawdown, these numbers further reinforce the consistency and long-term reliability of the strategy. This P&L curve looks very healthy overall. The equity growth is steady across many years, with strong recovery after pullbacks and no major equity collapse. What stands out most is the consistency. The strategy continues making new equity highs over time, instead of relying on a few large winning periods. For a long-term automated ES strategy, this is a very positive and stable-looking equity curve. Another strong point is the yearly growth structure of the equity curve. The strategy does not depend on a single explosive year. Instead, it continues building higher profits over time with relatively smooth progression. You can clearly see the acceleration after 2022, where the equity curve becomes even steeper while still remaining controlled. That type of sustained yearly growth is a very positive sign because it suggests the strategy adapts well to changing market conditions, rather than only performing in one specific environment. And here are all the trades the system has executed over the past 10 years. As you can see, the strategy maintained fairly consistent activity across many different market conditions. And here's the profit factor performance over the past 10 years. As you can see, aside from 2017, which was not the strongest year for the strategy, every other year maintained a good to very strong profit factor. After 10 years of operation, this system has delivered an impressive net profit of $472,000. Profit factor of 150. This is a fantastic number over a span of 10 years, showing that our strategy is not only effective, but also stable, delivering exceptional returns relative to the risk. And one key point that can't be overlooked is the max drawdown of this strategy. It's just over $14,000, which is a very reasonable drawdown considering the $472,000. And what's even more special is that the results you're seeing today were achieved through a perfect balance between long and short positions. Typically, when you look at back-tested strategies with long-term profits on indices, most of the gains come from the long side because markets tend to rise over time. However, what our strategy does is balance both long and short positions effectively. Whether the market is going up or down, you'll always have a position, either to buy or to sell. Next, we're going to implement the templates that played a crucial role in achieving these outstanding results. First, we'll begin by loading up the 10-year data chart, starting from January 1st, 2016, all the way through to May 8th, 2026. This will give you a comprehensive view to evaluate the development and effectiveness of the strategy over this extended period. Next, we'll set up and load the appropriate parameters for different trading time. This helps optimize the strategy, ensuring the system performs effectively under various market conditions, whether it's throughout the day or across the week. First, let's start with the first trading time, from 6 p.m. to 9:30 a.m. This is a period with low volatility, so to optimize the strategy for this time frame, we'll set up a unique set of parameters. This ensures the system performs smoothly and effectively during these quieter market hours. Next, we'll set up for the second trading time frame, from 9:30 a.m. to 11:30 a.m. This is when the U.S. market session kicks off, and the volatility and market chaos begin to rise. So, we'll apply a unique set of parameters to take full advantage of this chaos and capitalize on the potential opportunities the market provides. Finally, we'll set up for the third trading time frame, when the market starts to stabilize. This is after the high volatility has calmed down, and we'll apply a different set of parameters that fit the current market conditions. With this strategy, the system will perform effectively and deliver stable results during these calmer market periods. Next, we won't apply any probability filters in the system to ensure the results we achieve are as realistic as possible, with no selection or adjustments made. Finally, we'll activate the strategy and click OK to get the system running. Next, let's take a look at the detailed results you saw at the beginning of the video. First, the net profit stands at $472,275.60, an impressive figure that shows the success of this strategy. The profit factor is 1.50, which is a very good ratio, indicating that the strategy has generated much higher profits compared to the risk involved. What's even more remarkable is the max drawdown, which is only $14,461.60, indicating that the maximum risk taken is quite reasonable throughout the trading period. Additionally, with 2,665 trades, the strategy has maintained stability over a long period. Other numbers, like the largest winning trade of 115.47 and the largest losing trade of 666.74, are noteworthy. And with a reward-risk ratio close to 2:1, it's clear that this is a very solid result with an almost ideal profit-to-risk ratio. And if we take a closer look at the statistics for both long and short positions, the results are truly impressive. Profits are distributed evenly across both directions, with a profit factor of 1.5 or higher for both, showing that both long and short positions are performing equally well. This proves that our strategy is not only effective in a rising market, but also capable of generating good profits in a declining market, offering stable trading opportunities in all conditions. This strategy shows a great profit potential, with a total net profit of $472,275.60. Although the win rate is only 47.35%, the winning trades are quite valuable, with an average profit per winning trade of 115.47 and much higher than the average loss per losing trade of 6,666.74. This shows that the strategy can generate significant profits from successful trades. Another strength of this strategy is its Sortino ratio of 2.41, indicating that the strategy does a great job of minimizing downside risk and can provide reasonable returns compared to the risk of decline. This helps the strategy maintain more consistent performance throughout the trading period. Additionally, the average profit per trade is 120,021 RSOG, which indicates that each trade is generating a positive return over the long term. With 1.02 trades per day, this strategy doesn't execute too many trades, helping to minimize overload and focus on high-quality trading opportunities. This strategy shows a steady and positive P&L slope over the course of 10 years, indicating consistent growth without any significant drawdowns. This is a strong positive sign, as it demonstrates that the strategy has maintained a continuous profit over a long period without experiencing any sharp declines. Now, let's take a closer look at other important details of the strategy, such as losing streaks, winning streaks, and the simulated results if we enter trades right after a winning or losing streak. These insights will give you a better understanding of the strategy's resilience and performance when applied in real-world conditions. This strategy has shown clear improvement over the years, with max loss dropping significantly from 11 in 2016 to just 4 in 2026, indicating better risk management. At the same time, max win remains stable, and the profit factor reaches 1.81 in 2024, showing the strategy's strong profit-generating ability. The average number of trades per day is not too high, ranging from 0.84 to 1.23, allowing the strategy to focus on quality trades rather than quantity. In summary, this strategy provides stable profits while minimizing risk, making it ideal for investors seeking sustainability and long-term returns. Next, let's take a closer look at how New Horizon generates its signals and identifies trading opportunities in the market. First, let's talk about trend direction. New Horizon identifies trends based on the slope of the market. Here, we can see the market has just made a sharp move lower with a strong slope, indicating that selling pressure is in control and a clear downtrend is beginning to develop. Once a downtrend has been identified, the system looks for a shallow pullback. This is a critical condition before any trade signal can be generated. If price pulls back too deeply or fails to meet the criteria of a shallow pullback, the system will simply avoid generating a trading signal. Similarly, once the system identifies a strong and stable uptrend, the next step is to look for a shallow pullback before considering a trade opportunity. The reason is simple. In a healthy uptrend, price rarely moves straight up without interruption. Instead, it typically experiences short-term pullbacks before continuing in the direction of the main trend. New Horizon evaluates the depth of these pullbacks to determine whether sellers are simply taking profits or if a larger reversal may be developing. In addition to identifying the trend and the pullback, New Horizon also requires the signal candle to show sufficient strength, confirming that the pullback phase has likely come to an end. By combining trend slope analysis with shallow pullback requirements, New Horizon is able to avoid a large portion of sideways market conditions. The reason is that when the market develops a strong slope with clear momentum, it usually indicates that price is moving with purpose in a specific direction rather than simply oscillating inside a range. These conditions are generally much less likely to occur during true sideways markets. The shallow pullback requirement adds another important layer of filtering. During sideways conditions, price often swings back and forth with deeper retracements and inconsistent structure. As a result, many of these movements fail to meet the shallow pullback criteria required by New Horizon. Next, let's go over some of the most common questions traders have when using New Horizon. One of the most common questions we receive is, why am I not getting the same results with New Horizon as other traders or as the published performance results? Let's look at the following example, and you'll quickly see why the same strategy can produce very different results for different traders. These are the trading results from the most recent 10 trading days on the S&P 500. A very convincing performance with nearly every metric showing strong efficiency and solid consistency from the strategy. But looking at the results alone is still not enough to fully evaluate the system. Let's take a look at a real situation that many traders have experienced and frequently sent feedback to us about. The question is, why does the system sometimes lose immediately after they enter a buy trade? Let's take a closer look at this example. Here we have a winning trade, but right before it, the system went through 4 consecutive losing trades. If we stop and focus only on those 4 losses, psychological pressure starts building almost immediately. And for most traders, this is exactly where doubt about the system begins to appear very quickly after seeing a losing streak like this. But let's zoom out and look a little further back at the previous market phase. You'll notice that the system had already produced a series of winning trades before that losing streak happened. In this exact example on the chart, the system delivered 4 consecutive winning trades before the recent losses appeared. And if we continue looking further back, we can see 2 more winning trades before that. That brings the total to 6 consecutive winning trades. What's important here is that before this streak of 6 winning trades, the system recorded only a single losing trade. And even before that losing trade, the system had already produced another streak of 5 consecutive winning trades. This shows that although short-term losing streaks will happen from time to time, the bigger picture still reveals a very clear long-term edge within the strategy. Next, we once again see only a single losing trade. And before that loss happened, the system had already delivered another 2 consecutive winning trades. So what we really want to show you here is that if you happen to enter the market during one of these losing streaks, don't panic too quickly. Our system is fully capable of generating long sequences of winning trades, just like the examples you've just seen on the chart. And the important thing to remember is that every trading system will always have both winning and losing trades. What truly matters is not avoiding losses completely, but whether the system can still maintain profitability and a long-term edge after going through both winning and losing periods. And next, let's look at a very realistic situation that many traders often experience. Take a look at these results. After the full backtest sequence, the system achieved a profit factor of 1.51, which is a very solid number. However, let's take a closer look at the chart here. Our strategy is still a strong strategy overall. However, every trader starts at a different point in time. For example, let's say you began trading on June 11th, 2025. In that situation, you would have a major psychological advantage right from the beginning because the system had already produced a strong, profitable run early on. That makes it much easier to stay confident and emotionally comfortable when facing the drawdown periods that may come later. However, using that exact same strategy, let's say I started trading on December 29th, 2025 instead. In that case, I wouldn't have the same early advantage because I would be entering the market right as the system goes through a difficult drawdown period. In trading, every trader's position and starting point will always be different. Some people begin during strong market conditions, while others happen to start at the most challenging moments. But just because your starting point is not ideal does not mean the rest of your journey will be hopeless. Sometimes, the only real difference is that you may need more time to reach the same destination. And looking at the bigger picture, what we really want to share is that every trader starts their journey at a different point in time. Some people begin during strong market conditions, while others may start during a more difficult period. And that's completely normal in trading. The important thing is giving your strategy enough time to fully play out and show what it's capable of. Because trading is always more of a long-term journey rather than something defined by the first few days. Next, let's cover another common question. Why does the account status sometimes turn yellow, and what does it actually mean? Let's take a look at the chart. Here we can see an active signal on the screen, and we refer to this as a running signal. This happens when you enter the market or start the BOT after the signal has already been generated. It can also occur if the BOT was turned off for any reason and then restarted while a trade is still active. In this situation, the bot will not jump into the trade that is already in progress. Instead, it will wait for that position to finish according to its own ATM management rules before looking for the next valid setup. That is why the account status may turn yellow. It is not an error. It is simply New Horizon informing you that there is an active signal on the chart that the bot is intentionally ignoring because it was generated before the system was activated. Once this running signal has completed according to its ATM management rules, the system will automatically return to its normal state. At that point, New Horizon will continue monitoring the market and will be ready to enter the next valid trading signal as soon as it appears. Next, let's talk about another common question. Why does the system generate so few trades? First, this is an intraday trading system, so its goal is not to generate trades continuously throughout the trading session. Instead, New Horizon is designed to wait for the most favorable market conditions before generating a trade, prioritizing signal quality over signal quantity. However, if you feel that the current trade frequency is lower than you would prefer, there is a simple solution: running multiple templates at the same time. Currently, we offer an NQ template that averages more than 2 trades per day. We also provide a separate ES template that averages around 2 trades per day. Since each template is optimized for a different market, the trading opportunities are not necessarily the same. This means that instead of focusing on only one market, you can expand your trading activity across both NQ and ES. By running both templates on a single account, you may increase your average number of trading opportunities to more than 4 trades per day. More importantly, this increase in trade frequency does not come from lowering the quality standards of the system or forcing additional trades. New Horizon continues to apply the same filtering criteria, but by scanning multiple markets, it can naturally provide more high-quality opportunities while maintaining the same disciplined trading approach. As a result, in just a little over 2 trading days, the BOT executed a total of 9 trades. This demonstrates that while each individual template may not trade very frequently, combining multiple templates across different markets can significantly increase the number of trading opportunities while still maintaining the quality standards of the system. Next, let's address one of the most frequently asked questions. How has New Horizon performed recently? To provide a more realistic perspective, we conducted a backtest using the most recent 30 trading days across 3 different templates currently available to traders. First, we have the NQ and MNQ More Signals template, a configuration designed to generate more trading opportunities without using the probability filter. Despite producing a higher number of trades than the other templates, the 30-day backtest still delivered strong performance. Next is the template we have been using for Bulinox funding evaluations. To date, it has shown some of the most stable performance on NQ. One of its biggest strengths is its ability to generate profits that significantly exceed its maximum drawdown, resulting in a very favorable reward-to-risk profile. Rather than focusing on trade frequency, this configuration emphasizes signal quality and capital preservation, making it a strong choice for traders pursuing funded account evaluations or long-term account growth. Next is the ES template. This is another promising configuration that has continued to deliver solid performance in recent market conditions. While its growth rate may not be as aggressive as some NQ-based templates, ES offers its own advantage through greater stability and generally lower volatility. The results from the last 30 days show that this template has continued to generate positive returns, making it a strong option for traders looking to diversify their opportunities alongside NQ. Next, let's go over a few important notes you should understand when using New Horizon. These guidelines will help ensure the system operates properly and help you avoid common situations that may impact trading performance. First, always make sure the system connection status remains green. This indicates that New Horizon is properly connected and able to monitor the market and execute trades as intended. If the status changes to red or gray, the system will not be able to enter new trades. As a result, you may miss potential trading opportunities, including winning trades that were identified but could not be executed due to the connection issue. For that reason, it is a good practice to verify the connection status before each trading session to ensure the system is operating normally. Next, never close NinjaTrader or shut down your computer while the system is running. New Horizon must remain active in order to monitor the market, manage open positions, and process new trading signals. Second, make sure you are using the correct template before you start trading. During customer support, we have seen cases where traders modified settings on their own or accidentally used configurations different from those provided. As a result, New Horizon may behave differently from its intended design and produce results that do not match expectations. There is nothing wrong with adjusting settings or customizing the system. However, every modification changes how the strategy operates. For that reason, before applying any new configuration to a live account or funding evaluation, you should perform a thorough backtest over a sufficiently long period of time to understand its performance, drawdown characteristics, and overall behavior. Most importantly, avoid judging a new setup based on only a few trading days. Allow a larger sample of data and backtesting results to guide your decisions. Third, if you would like to verify the backtesting results we provide, make sure your historical market data has been fully downloaded and synchronized. A simple way to do this is to reload historical data several times or refresh your historical database before running a backtest. This helps prevent issues such as missing data, incomplete records, or synchronization problems, which are among the most common reasons for differences in backtest results across different computers or accounts. In many cases, discrepancies in backtest performance are not caused by the strategy itself, but by the quality of the underlying historical data. Before evaluating any template, always ensure that your historical data is complete and accurate. Fourth, to accurately monitor every trade executed by New Horizon, make sure the account selected inside New Horizon matches the account selected in NinjaTrader. This is a common mistake among newer users. If the two accounts are different, the system may place trades in one account while you are monitoring another, creating the impression that the bot is not working or not taking trades. Before each trading session, take a few seconds to verify that the account settings in both New Horizon and NinjaTrader match. This simple check can help you monitor trades correctly and avoid unnecessary confusion while using the system. Next, many traders want to use New Horizon to pass funded account evaluations. However, to reach the profit target faster, it's important to have a proper scaling plan rather than trading the same size all the time. That's why we created an example based on Apex funding rules to show how traders can increase position size while using New Horizon, with the goal of passing an evaluation in about 1 month. For the $50,000 account with a $3,000 profit target, this plan uses MES contracts and is divided into 3 stages to balance growth and risk management. In the first stage, we trade 5 MES contracts for about 13 trading days to build an initial profit cushion of roughly $1,000. Once that milestone is reached, position size increases to 8 MES contracts for the next 8 trading days, targeting another $1,000 in profit. After the account reaches approximately $2,000 in profit, position size is increased to 10 MES contracts for the final stage to complete the remaining profit target and move beyond the $3,000 goal. Based on this plan, the entire evaluation can potentially be completed within about 28 trading days. The key advantage is that position size only increases after a profit cushion has been established, helping reduce trailing drawdown pressure and creating a more stable path toward passing the evaluation. For the $100,000 account with a $6,000 profit target, this plan uses E-mini S and P contracts, or ES, to improve execution efficiency and reduce trading costs compared to using a large number of MES contracts. The plan is divided into 3 stages. In the first stage, we start with one ES contract for about 13 trading days to build an initial profit cushion of roughly $2,000. Once the account reaches the $2,000 profit milestone, position size increases to 2 ES contracts to accelerate growth while creating an even larger safety buffer. Finally, in the third stage, position size increases to 3 ES contracts to complete the remaining profit target and move beyond the $6,000 goal. Based on this approach, the entire evaluation can potentially be completed within about 25 trading days. The key advantage is that position size only increases after profits have been accumulated, helping reduce trailing drawdown pressure and creating a more stable path toward passing the evaluation. For the $150,000 account with a $9,000 profit target, this plan takes advantage of the larger trailing drawdown allowance, allowing traders to start with a larger position size and potentially shorten the time required to pass the evaluation. The plan is divided into 3 stages. During the first stage, we begin with 2 ES contracts for approximately 10 trading days, targeting an initial profit cushion of around $3,000. Once that milestone is reached, position size increases to 3 ES contracts for the next 7 trading days, allowing for faster account growth while still maintaining reasonable risk through the accumulated profit buffer. Finally, in the third stage, position size increases to 4 ES contracts to complete the remaining profit target and move beyond the $9,000 objective. Based on this plan, the entire evaluation can potentially be completed within about 22 trading days. The key advantage is that position size increases only after profits have been built, allowing for faster progress while maintaining stability and risk control throughout the process.